Hi everybody, welcome back to another episode of the Fire Me channel. So today's video is a special request from one of the subscribers. They were wanting to do a mid-year portfolio update to see what the current value was. Normally if I was back at the office, I'd just film this in one of our breakout rooms with one of the big TVs. You could follow through and see on the spreadsheet everything, but I'm just gonna kind of read through things. Unfortunately, we're still working from home with this COVID stuff, but yeah, pretty exciting. I actually had to remake this video a couple times because the market has swung up and down wildly here in the last week or two based on just headline news for number of coronavirus cases increasing, unemployment numbers being better. When I originally made this, did the slides for this video, we were actually only down about $2 on the portfolio, and now it's as of Friday things have crashed, so it's the Saturday, so I figured, well, the market will be kind of shut down for the weekend, so it'll give me a chance to maybe get ahead a little bit. So let's go ahead, and I'm going to call this the end of our Q2 2020 results. It's basically the end of June now, and yeah, let's go ahead and see how we've done. All right, first JP Morgan. So best of breed bank. I don't need to tell you about them. The one thing I really like with these guys is they've got a very strong balance sheet, and their loan loss provisions that they have got built up should sustain them through any kind of short to intermediate term losses they might have because of this coronavirus business. All the banks are getting punished now because the interest rates are virtually zero at this point, and the market is worried that people are going to start defaulting on loans, etc. if we end up going from a liquidity crisis to a solvency crisis. So you know, a lot of people are shying away from banks, but I think if you've got a long-term outlook on things past, you know, you got to be kind of like Warren Buffett. You got to look past the next quarter or year and look what this company's prospects are for the next 2, 3, 5, 10 years out. And I think for JP Morgan and the other companies that we've got in our portfolio, the long-term prospects are better than most of the other companies in the market right now. So originally we bought JP Morgan for $99.19. It's currently at $92.59, so we've lost $6.50 or about 6.65%. Not bad considering how turbulent the market's been. If we had more cash right now, I'd be buying more shares every time there's a dip. I think long term this is going to be a buying opportunity for all these companies. Plus, on top of it, with the way the Fed's printing money, I can't see this leading to anything but inflation. It's devaluing the currency, and now the only saving grace is the entire world's in the same situation and doing the same thing, but time will tell. So if you're not into risk assets right now, you should definitely be taking a look at them. All right, the next company, Ventus. So the market hates this company. I'm still very bullish on it. Like I said, my time horizon is more than the next quarter, 6 to 12 months. It's 5 plus years. So originally we bought 3 shares of Ventus, and our average for those purchases has been $52.43. The current price is $35.72. So we're at a total net loss of $50.14, or down 31.8, or let's call it 32%. Now Ventus is prime to be punished here because obviously this COVID virus stuff affects the elderly more, and Ventus is a REIT, which if most of you have been following, a lot of these REITs are in trouble because their renters are not paying their rents or want reduced rates. So I think Ventus, though, is in a slightly different position because Ventus is not a shopping mall or commercial real estate in terms of office buildings. They own the buildings for nursing homes, for research facilities and things like that. So research facilities are long-term contracts, and typically leasers of those facilities are either the government or big universities, etc. So they've got a much larger ability to pay than say a shop owner in a mall. The other thing too is, because they're dealing with these senior rental properties, people kind of take a dim view on that right now because those are the people being affected the most by this virus. But, thinking long term, we get a vaccine, it's going to be business as usual. I don't know how much it's hurt their business. I'm sure move-ins is down. I believe I read that as well, previous news article. But long term, people are still going to get old and need a place to stay, and people's families are going to move them in there. So, short-term hiccup, I think it's going to be a great buying opportunity for a long-term hold. They're a well-managed company, and I like that play on the baby boomers. We just got to get through this virus business, and I think long-term you'll be okay with this one. It's got a great operator, and they're a well-capitalized company, so I don't think there's any risk for them going bankrupt. I think there's other REITs out there right now that have a much higher risk of going under before Ventus does. And also Ventus hasn't cut their dividend yet. I think the share price is kind of pricing that in. Whether they have to or not, or whether they're going to maintain to pay it is another story, but time will tell. So anyways, that's Ventus. Like I said, short-term weakness. I think there's long-term viability in it, though. The demographic of the country in North America is just getting older every year with the baby boomers aging out. And I think it's one that you need to look into for yourself if you're not already in it. But if you are in it, don't cash out. I don't think you need to take a massive loss at this point. Just hang in there. I do believe things will come back, and you should just hold that one for the long term. All right, Delta. Now, okay, so airlines, obviously no one's traveling right now. Some of the domestic flights are picking up. People are scared. No one wants to fly long distances overseas. Even if you do fly overseas, you're going to be going to places where they require you to quarantine. So, it's just not even worth traveling almost right now. The places you do want to go, even domestically, say Disneyland or all these other kind of places, they're like hotbeds for this virus spread. So, someone told me once at Disney, this is before the coronavirus business even got started, that it's a great time, but expect to get the flu when you're there. Basically, there's a million little kids running around with snotty noses, touching everything, and you're just going to get sick. That's the way it is. So no one's traveling. Things are going to be tough. Delta and Southwest have the best balance sheets in the industry, so I'm sticking with Delta. If you're in Southwest, that's a good one too, I believe. But I kind of like Delta because when things get back to normal, they have the international exposure, which is big margin flights for these guys. All right, so we've purchased 3 shares of Delta now. Our average price is $41.27. Before the coronavirus, I would have said anything under $50 is a deal. Right now, who knows? The longer this goes on, the worse it's going to be. But the current price at $26.91. I believe if you, based on where things are at now and, some of this flare up with the reopenings, I think you're going to probably get a chance at this one closer to $20. I was thinking maybe 22 would be another spot where we might be able to pick some shares up, just because the longer this thing goes on, the tougher it's going to be for these companies to stay afloat. Now, that being said, this is a strategic industry, and the federal government is not going to let every airline operator go under. So if any of them are going to be saved, Delta is definitely going to be one of them. Not that I want that to happen, but the reality is this is a strategic industry for the country, and we basically can't afford not to have an airline. So currently we're at a total net loss of $43.08, or down about 35%. Not good. You know, these are great companies. This is a pandemic with extraordinary circumstances. So I'm not going to beat ourselves up too much for this, but you know, time will tell. But these are the best of breed companies, and these are the most likely to come out of the other end of this thing in one piece. So I'm still bullish on Delta long term. I think I've mentioned in another video before that I lived through 9/11 and what the market did, and basically the airline industry completely collapsed. Everything got shut down until they could figure out what was going on. I think you know, that recovered, and the airlines actually were better now than they've ever been before this virus started anyways. So I think there will be a return to profitability, and you know, the management of these airlines now is really quite good, not like the old days where it seemed like there was an airline going bankrupt every other week. But anyway, so that's Delta. I'm still holding it. I don't think we should sell it. It's still one of the pillars of our portfolio. You know, in a year or two, this is probably going to look like the buying opportunity of a lifetime, so maybe we should just be buying more. If we get some more cash, we'll probably add to the position. But yeah, that's Delta for now. All right, my favorite oil company, Chevron. So we've purchased 2 shares for an average of $99.90. Current price is at $86.46. So that's a net loss of $26.88, or down 13.5%. Like I said, the market's been wildly fluctuating. So Friday, everything closed down. We were pretty much even on Chevron before that, but Chevron is the best integrated oil company, in my opinion, in North America. They got a better balance sheet than Exxon. Exxon's a pretty close second. So either one of these would do well, but Chevron is the one you want to be in my opinion. Big operator, pay a good dividend. They've been holding the dividend, and that's really important to them. They sit on a pile of cash to be able to pay this. So as long as I think as long as the oil price stays at that $40 plus range, you'll be okay in this. Now, here's the big risk to Chevron and these other oil companies, in my opinion. We're still going to need oil for all kinds of things. This, like, even if we went to 100% hybrid, 100% electric vehicles in the next, say it happened overnight and it happened tomorrow, we're still going to need oil, probably not to the extent we do now, but oil is basically a raw ingredient in almost everything that's manufactured. Primarily, number one is plastic. And as you know, everything's made out of plastic. The computers, the TVs, the you know, body panels. The company I work for right now, we're actually building a plastic plant, and somebody asked the CEO at a town hall, why are you guys building a plastics plant when the whole world has turned against plastic? And he said the demand for plastic is being driven actually by electric vehicles, because they need to lighten the weight of them so that they get the same mileage as a conventional car. So I thought that was pretty interesting, that you know, even though we're going to electric, or the trend is towards electric and all these other alternative fuel sources, that they're actually requiring way more plastics, which are ultimately a byproduct of fossil fuel. So can't win either way, but these companies, even if we get the fully integrated electric vehicle system all across the entire continent, we're still going to need oil. Chevron is best situated. And the other thing too, a lot of people don't realize, even if, say, the Western world were to go completely solar, electric, and didn't use any fossil fuels for transportation purposes, other countries around the world like China, India, which have massive populations, they're way behind us in terms of standard of living, and they are sucking up oil right now like unbelievable. So you know, global demand, I can't see it dropping anytime soon, but Chevron's definitely well positioned to be in the future of the oil and gas industry. All right, the next company, a crowd favorite, Apple. So we've only purchased 1 share for $319.72. At the time, I thought we were way overpaying for this thing. I thought it was pretty frothy, and I think in the video where we bought that, I said, you know, we're only buying this at this price because I wanted to get the share for the pillar of our portfolio. And not that I was in a hurry to buy it, but it just didn't seem like we were going to get any better buying opportunity in the near term. And of course, as soon as we bought it, it dropped dramatically. We could have got it for $40, $50 less. But now, current price is $353.63. So that's a net gain of $33.91 or 10.61%. Do I think it's worth $353? No. I think if things were normal, it would probably be in the high 200s, low 300s. But with what's happening in the market right now, everybody's running to these tech companies, which in the old days, the safety trades would have been like the Kraft Heinz, the Procter & Gamble's, Johnson & Johnson. But now the safety trades are these big tech companies like Apple, Microsoft. So this is where everyone's piling into. And to couple that with all the share buybacks Apple's been doing, it's lowered the share count, which means their earnings per share is even inflated higher because of that. So, you know, I think if they continue with the share buybacks, you know, the price at $350 today feels frothy, but if they keep building the services business, the wearables, the hardware business stays relatively strong, and they keep going as is, I think with the buybacks, boy, this thing, who knows where it could end up. Do I think it'll be multiple thousands of dollars per share like Amazon? Well, it depends how much they buy back, but you know, the whole world uses their products. So, you know, whether it's earbuds or phones or tablets or iPads, I don't know anybody at this point in time that doesn't actually have an Apple device of some kind. So anyways, great long-term prospects. I wish we would have bought some much lower, but we'll probably hold off adding to this position in the short term. I think some of our other companies that we have that are way down are good opportunities to average down. You know, maybe this is an opportunity to average up. You know, you don't want to cut your flowers and keep your weeds, but I'm pretty happy with Apple right now. I think we're just going to hold it, keep status quo, collect the dividend, and see what happens. All right, now one of my favorite companies, this is a total spec. We hold it in the portfolio. I think of all the speculative companies out there, there's only two that I would hold because I actually believe in them. One was just come public, Nikola. I'm going to be doing an upcoming video on them after I do some more research. I know a little bit about them. They just became public, but I'm going to do a bunch more research on them, their technology, what they're all about, and we'll be putting out a video on them. For those of you who don't know about Nikola, they're basically like a hydrogen electric fuel cell hybrid vehicle maker. You know, they're kind of in competition with the same crowd as Tesla. I think there's a bunch of advantages to the Nikola vehicles over Tesla with the hydrogen, but we'll go into that in the other video when we make it. But the one thing I do really like about Nikola is the pickup truck that they have, that they're going to start taking pre-orders for. Looks very similar to like a Ford or GM type of pickup truck, so more conventional, whereas the Tesla pickup, it's more of a novelty thing. I don't think a rancher would ever buy the Tesla, but the Nikola one, I could see people getting on board with that, especially if these fuel cells are reliable and it's cheap to keep these vehicles fueled. So anyways, but the number one speculative stock and that we hold for the portfolio is Virgin Galactic. I love this company. We've purchased one share for $22.50. Current price is $15.55, so a net loss of $5.95, or down 27.5%. If I had more money right now, I would be averaging down on this. So we've mentioned a few things about Virgin before. They've got really good balance sheet in terms of cash on hand to be able to keep the company going for a significant amount of time without actually having to raise more money if they stay unprofitable. They also have just signed a deal with NASA to actually train, I'm going to just call them civilians, for space flight, so they can do space tourism potentially to the International Space Station, which is in low orbit. But for those of you who follow the channel and watch the other Virgin Galactic videos, you probably already know that the real benefit of Virgin Galactic is the technology they're developing is ultimately going to be allowing us to fly from continent to continent in subspace, which will dramatically cut down the amount of time it takes to fly anywhere in the world. So just for an example, I always use this one. To fly from the US to Australia is, I think it's about 22.5 or 23 hour long flight. To fly there in subspace, that would cut it down to about 3 to 3.5 hours. So huge time savings, not to mention the environmental impact of only having to fly, say 3.5 hours versus 22 hours across the ocean like that. So plus I think it would also allow a lot more people to make a longer trip like that, where, you know, if you got young kids, you're less likely to fly to Australia if it's going to be a 20-hour flight than if you can just go and it's a 3.5-hour flight. So I think this is a disruptor technology that will change the world once they get it sorted out. Right now, I'm going to say they're in this like prototype phase where they're just getting everything figured out. Obviously, they got to be safe because they're putting people in space, so they're going slow and making sure things are right before this becomes mass transit. But I could definitely see in 5 to 10 years this technology being completely figured out in commercial air traffic going continent to continent with this subspace technology. So get on a Delta flight and you're going to be flying subspace to Europe or somewhere overseas, and it only takes a fraction of the amount of time to do that. So very exciting. I can't wait to see what Richard Branson comes up with this long term, but this is definitely our spec. For people that like Tesla in the early days, they should love Virgin Galactic. I see a real practical purpose for this worldwide. Tesla, you know, they're got great technology, but they're just another car company in my opinion. Virgin Galactic is the first publicly traded space company, so very exciting. I hope you guys like Virgin as well. Just let me know what you guys think of any of these companies we're investing in. I know the first 5 are pretty boring. They're like I'm going to call them your staples of the portfolio, the pillars of the portfolio, as I like to call them. Kind of boring. They're big, make a lot of money. They give you good dividends. We definitely need to keep building those up. But it is fun to have these like speculative stocks to follow and watch that have really exciting technology. America is probably the leading innovator in the world for exciting new technologies. There's stuff that comes out that is so incredibly innovative, it's fantastic. So let's just go over the summary results now. So total invested $921.31 US. Total current value is $822.57 US. So unfortunately, we're down $98.74, or a total of 11%. Like I said, I had to redo this video like 3 times before we actually got to film it, because the first time I did it, the market was way up. The next day it dropped, so redid the numbers, and then it went up, and then Friday it closed way down. So we were, I think, the first time I think I mentioned this before, the first time when I did the slides for all the numbers, we were down like $2 and a few cents, and then blinked our eyes twice and it dropped significantly more than that. But we're still in the early days of the portfolio. We got lots of time, lots of investments to look at. Like I mentioned before, I'm going to get back to you guys on my research on Nikola. When I do that, I'll make another video just specifically for them so we can check them out. I don't think they're as well capitalized or well funded or have the interest that Tesla has at this point, but I do believe in their technology for the long term, and I've researched a few things on, but when I make the Nikola video, I'll go through all that. Anyways, I hope you guys are staying healthy and staying safe. Have a great summer, and we will see you guys in the next video.